Well, hi folks, let's talk about natural gas again very quickly. I'm not in the market right now. The futures contract has rolled over and I exited both of my positions long from 211 and long from 239 at a profit. What's interesting on these charts is that you can see I've got the NYMEX chart here in the center and my broker chart here on the right hand side, and look at the difference in candle shapes, and it's the way they treat the rollovers. My broker adjusted the price in advance to incorporate the rollover for the next contract, whereas the NYMEX chart shows a gap up, and they both ended up at the same price at around 2.45, and so I got out at about $2.40 for both positions, one from $2.11 and one from 239. So a decent profit on the lower trade and a small profit on the second one, but not nearly as much as I wanted. And since the rollover, the market's just moved sideways. These are 4-hour charts and we're just sort of moving sideways right now. So nothing's really happened since then. A little bit of up and down, but not much. Let's have a look at the overall picture. So I'm going to use the NYMEX charts for it because my broker's a bit confusing due to the way they treated the rollover. So here's the NYMEX chart. There's that 4-hour gap up because of the rollover, just bouncing off the 200-day moving average on the 4-hour chart, gapping up through the 20 and the 50, and now we're above both the 20, the 50 and the 200, so quite positive really. And since the rollover, the price hasn't pulled back, so we're just holding at the new contract price levels, which is great. However, if you look across to the left hand side here, we are just at that resistance level, that head and shoulders left hand shoulder that I pointed out a few days ago. So we're right there at the moment and we haven't managed to close above it, which is a bit of a concern. Let's have a look at the overall picture on the daily chart. So here's the daily chart, and pretty much the same picture as you saw in the 4-hour chart. There's the gap higher. We closed beneath this yellow support and resistance zone before the rollover, but we held above the 50 and the 20 period moving averages on the day chart. And there's the gap up, just closing that gap and closing above that yellow support and resistance zone. So all of that looks pretty positive. Overall, the day chart hasn't changed much. So we're pretty much at the same price that my broker rolled over at. Just above 239, we're at 244. So not much of a price difference. Now it's Friday afternoon and we've got the weekend coming up. It's the weekend after the rollover, so really anything could happen. And I'm not too sure. I think it's looking quite positive, but I'm not willing to enter a new trade today. I think I'd rather wait until Monday, see how the weekend opens up. If we do gap up higher over the weekend, then I'll look to buy natural gas on a retracement back into that gap. Let me try and illustrate that for you. So let's say today we end up just closing perhaps at around about $2.40 and we open up at maybe $2.50 or 55 after the weekend, with a little bit of a gap in between close and the open. I expect then that the market will retrace and try to fill that gap, probably back down to the top of this support zone, back at about 239, where we ended up yesterday. And that's where I'll look to re-enter my positions if we get the chance. The other possibility is that we gap down over the weekend and that we open up on Monday or Sunday night in the middle of the supply and demand zone or below it. If we do open up inside this yellow band or below it, there's a chance that the price could continue back into this demand zone down below us at around about $2 to $2.10. So right now it's a pretty tricky period. And if you look at this chart over the last number of months now, going back into February, in fact, we've pretty much just moved sideways. We've had a little bit of success buying at the bottom around about $2, exiting a bit higher. But every time we've moved up, we haven't managed to make much progress. Note, however, that since March, on the daily chart, we're getting progressively higher highs and higher lows. You can see that on the daily chart. If I switch back to the 4-hour chart, you'll see the same sort of thing. It's a bit more obvious on the 4-hour chart. So there's the lowest low, then we get to that high, and then we move up and make a higher high and a higher low. We move up, we make a higher high, and currently a higher low. So I think overall it looks pretty constructive. My strategy for today, though, on natural gas is to not take a position, wait for the weekend, the markets open up on Sunday night, and depending on where we open up in relation to this support and resistance band, I'll decide on my strategy going into next week. So remember, if we gap up and close higher than where we are now, we might close at the top of this band, then I'll be looking to buy dips into the gap down towards the top of this band, back down to 239. If we open up inside the band or below the band, then I'll be a little bit more hesitant and I'll be watching the market for a potential move lower back into this broader yellow band below us, which is the big area of demand and support and where most of the action has taken place over the last number of months. So right now it's just a matter of wait and see. Let's see how we open up on Sunday night or Monday morning, depending on your time zone and your broker. Now that I've been to an Indian hairdresser and had a smart business cut and shave, and I'm all ready and rearing to go, there's nothing to do until Sunday night, so enjoy the weekend and I'll probably speak to you again about natural gas on Monday or Tuesday. If you enjoyed this video, please give it a thumbs up, and if you're new to the channel, why not consider subscribing. Take care.